So I believe there's another trap coming very, very soon where retail traders are going to get in so short and then price is going to bump back up. How's it going, fellow traders? Magic Trader here, and this is your CFTC report for the data that was recorded on March 28, 2023. Welcome back for another episode, ladies and gents, and we're going to get into some really incredible things that just took place this past week. You gotta see it. So let's start by taking a look at gold and what the banks have been up to. Look at this. All right, so increase in longs, increase in longs. Look at that. From 215 to 230 to 237 to 245. Are we that surprised? No, we're not. The banks were increasing their long positions as they were decreasing their short positions, okay? And that was enough to get price all the way up here on the weekly chart. And if you take a look, the rally took place from our institutional demand area that we located on the charts. And so price is now up here. You know, it's getting pretty high up into the 2000 range. So what are we expecting? Well, I'll tell you. If you take a look at what's happening with the retail traders are getting into some short positions. And as they were shorting, what the banks did was they pushed price up, okay? So what's likely going to happen now is that the retail traders are going to start shifting their positions from short to long. All right. And as they do that, what's going to happen is price is going to likely drop. We're seeing something similar with the euro US dollar right at this point. OK, so right now, with respect to gold, retail traders are about 57% short. All right. So watch in the coming days. We're going to see that switch over and they're going to become more long. And then what will happen after that is after they drop price a little bit, they'll get everybody suckered in long, okay? And when they start pushing price even further down, they're going to keep on adding long until they can't add any more long positions. And at that point, what they'll do is they will reverse price and shoot it to the moon, okay? That's what I suspect is likely going to happen. So we'll continue to monitor the markets and see what happens. All right, oil, what's going on here? Look at that. Oil hit our weekly area of demand and voila, straight into the air. Interesting, because when we look at the positions, we don't see anything really sticking out, okay? Look, we have long positions very cooled off, short positions are very cooled off, so nothing is really sticking out. So I'd be very careful with this one because I do think that there's a chance that it's going to drop at some point, okay? But overall, longer term, very good chance that we see a push to the upside. Now, is this the beginning of the push, what we're seeing right now? Who knows? I couldn't tell you that 100%. But what I do see is very strong evidence to support that oil can definitely go higher in the months and next year or so, okay? Let's go over to the US dollar. So the US dollar is slightly dropping, all right? Slightly dropping. Now, if we look at the data, what do we see? We see that long positions are cooled off, short positions are cooled off. Overall, the sentiment is cooled off, all right? So they're not really focusing on any positions right now. And there's a good reason for that, because they're not ready to kick this one into gear. When you see what's happening with the other pairs, and we're going to discuss the euro very soon, it'll become clear to you why they aren't aggressive with their positions. So right now, you shouldn't be trading the dollar, sit on the sidelines, wait until something more aggressive comes into play, okay? The Aussie, look at the Aussie, okay? Look at short positions, okay? 79, 81, 79, 79, aggressive. They're aggressive with their shorts. They're not doing anything really with their longs. Longs are still cooled off if you take a look at the last few weeks. But there is somewhat of a bearish bias. I would not be shorting it right now, okay? Why? We have an institutional demand zone right below price. So there's only so far price is going to drop before there's a reversal. I'd be waiting on the sidelines right now with the Aussie because I don't believe it's the right time to get into a trade. Retail traders are mostly long, with 62% of their positions long. All right. So they'll probably push price to the downside a little bit to get those longs into shorts, and then they will push price to the upside. Okay. So let's continue to watch and see how this plays out. USCAD, look at that. Look at longs, 91, 92. Now they're taking profits on long positions, all right? But remember, this is all around contracts expiring mid-March. We saw them bump up short positions from 31 to 62,000. They practically doubled their positions, all right? And now we see them very cooled off. And this is as price is just about to drop. Now remember, we were saying that we are suspecting that the dollar is going to drop over time. And this is really setting itself up well for that drop, okay? So when we take a look at what the retail traders are doing, they are mostly long at this point, okay? And this is why price is dropping right now. They're mostly long, and they're very long, 83% long, all right? So that tells me there's a good chance that we might see a little bit of a push up. Okay, because right now retail traders are going to start to offload their long positions and switch to shorts, thinking that price is going to continue dropping down like this. So that's going to be the trap. Okay, because when they get into short positions, the banks will push it up, and then when they're so short they switch to longs, then they'll drop price like that. Okay, so let's keep an eye on that. This one's going to be an interesting one. U.S. Swiss, not much going on here. Longs are cooled off. Shorts are cooled off. Nothing's really going on. All right. Big momentum candle to the downside on the monthly chart. There's no demand here to stop price from dropping further. We suspect over time this will probably fall with the weakness of the dollar. If we look at retail positions, they're about 84% long right now, which is quite aggressive, which tells me short term we could likely get a push to the upside. Same thing with the USCAD. Okay. Euro. This one's the fun one, okay? Because what we have been watching over the last several weeks is a influx of retail traders shorting, and then when they have so many short positions they can't add anymore because they're just so underwater, they close them for a loss, and then they get into long positions. And then just when they're getting in long, price is pushing up to the upside, so they keep on adding to their losing trade, and then when they're so long, right at the highs, guess what? They reverse price to the downside again. So I believe there's another trap coming very, very soon where retail traders are going to get in so short, and then price is going to bump back up. As of right now, they're in the process of switching their positions to long. So they're still 63% short, but they are transitioning 37% long, but that is going to start to increase as this week goes by. So I do suspect we're going to see short-term momentum to the downside, okay, to the downside on the euro for this week. All right, pound US dollar, take a look. Longs are very cooled off. Shorts are, a little bit more aggressive than longs, we can say that. Where are we responding here on the chart? We're responding to a demand area, okay, right here. We contacted that demand zone once, we contacted it twice. And then we got here supply pushing price down, supply pushing price down, and supply. So we're basically in a range between institutional supply and institutional demand. All right. For price to break in any direction, one of these zones are going to have to go. So it's either going to be this area of supply or this area of demand. My bet is it's going to be on supply, and we're going to see a push to the upside. But of course, for that to happen, we're going to have to see longs increasing, okay? They're very cooled off right now. When we take a look at the coloration here, it's nothing aggressive, all right? So it's sit on the sidelines time. I want to see these longs start to increase, and then I'll get excited about a potential long signal. Currently, right now, retail traders are 65% short the pound. Okay? All right. Let's get to US dollar, Japanese yen. We take a look at longs. They just started taking profits on long positions because they entered in long here, took profits on longs. That's what's fueling the move to the downside. It's not adding shorts, because if you look at short positions, they're very cooled off. All right? So there's no real focus on any position right now. They're distributing within a bullish cycle. Okay? So that means you don't want to be putting on a position with the US dollar Japanese yen right now, because the banks aren't putting on a position with the US dollar Japanese yen. We got to wait for them to start piling into a position, and then we can take advantage of that. But remember, we just recently contacted a severe demand area. This is going to cause price to stall, because I think over time there's a very good likelihood that we're going to get a drop in price, but it's going to have to eat through all this demand here first before that can take place. Okay? Now, when you look at the sentiment with retail traders, they are mostly short, with 59% of their positions short. And so they're probably going to jack price up, lure them into longs, and then they'll flip this one to the downside. Okay? Last but not least, the Kiwi. Shorts, very cooled off. Or longs, very cooled off, I should say. And shorts, they've been aggressively increasing them over the last several weeks. 6,000 to 16,000. That's quite aggressive of a rally, I should say. So sentiment is bearish, but I wouldn't be shorting this one right now because of institutional demand that's in play. Okay. If we take a look at what retail traders are doing, they're 54% short right now. 54% short, and I suspect that price will drop down, and as they drop, they'll get into more and more long positions, because I believe they're switching those shorts for longs. Okay, they were aggressively short not too long ago. Now they're only 54% short. So they're going to switch that for longs, and then when the banks are ready, they'll take those longs off of them, and they'll shoot price upwards like that. Okay, that's what I'm seeing happening. That is your CFTC report for this week. Hope you enjoyed it. Like down below, subscribe, leave a comment. Let me know what you think of our sessions. It'd be appreciated. I'd love to see your comments. And that's it. Enjoy the rest of your day. www.whiteoakfx.com. Take care. Talk to you later.